good to be here, and good morning, happy good afternoon, of course, depends where you are. Happy Wednesday. So in today's webinar, we have a lot of things to discuss. I'm not going to waste time. Let's begin. I'm Vladimir Ribakov from Home Trader Club. If you don't know who I am, I suggest check out our first video that we had on Monday. It was a fantastic session with a lot of interesting things happening in the market, and not only. And this is exactly where I want to start with. That would be the news. Okay? In the Eightcap member series, you have the economic calendar where you can filter all the most important news by high impact, medium impact, and so on. So what happened this week? A lot. Australia did not raise the rates. Whew. All the Australians should be very happy with that. However, yesterday the central bank was very clear, stating that the fact we did not hike the rates does not mean it will not be considered in the next decisions. Okay, such things could eventually become like a very hawkish view. Of course, the market has its time to stabilize, time to realize of what actually happening. But as soon as the idea of a possible hiking later on, especially when the neighbors from New Zealand just hiked yesterday, the impact it could bring is simple. Okay, that there's a very high probability that on the next meeting the rate might be considered. How did it affect the market? Well, according to the consensus before, some analysts expected the Australian bank not to hike, which turned to be correct. Some did expect, and the day before the rates, we saw the Australian dollar gaining muscles with some leaking rumors that the bank might surprise. The bank did not surprise. The bank just sent a statement yesterday saying we might do that on the next. So that's why the Australian dollar is being beaten by the market. Sort of disappointment from the traders, from the not hawkish enough, I would say, decision by the central bank. Then we had the rates in New Zealand, where they surprised and big time, while the consensus was towards the 5%, so hike on 25 points. The reality turned to be 5.25. So the New Zealand central bank hiked the rate by 50 basic points. They claimed about 4 weeks ago that they will continue to do all they have. And let's admit it, what is the first thing they do have? Interest rate, right? And who cares about people on the short term? So they decided to prove their word, and they hiked the rates by 50 basic points. So that's what we experienced. Then we had, of course, the everything happening in the US with Trump's being on the court. And well, long story short, I'm not going into the politics. The results there is really not surprising, at least to me. But what's interesting is that the chances, at least according to some sources, the chances that he actually will go and run again in the next elections, or his voice behind the scenes would be there, makes its statement. And very interesting statement happened to be there is his concern. What happened recently, I'll split it and I'll come back to this subject. What happened recently is China and Russia and Japan and other countries are all signing agreements, Kenya, Malaysia, and so on. They all start to sign different sort of agreements, how to use different currency for payments, and they are dropping and getting rid of the US dollar. And what's interesting here is Trump chose to attack this line exactly, claiming that the US dollar is losing its grip over the world's economy. More and more countries, and I think it's a question of time, right? Personally, will start to get rid of the US dollar, move to other countries, and the different agreements around the world would also be in different countries. Several decades ago, it all was about the gold, right? Well, more than several decades ago. And then, of course, the economy changed and everything, right? Each of the European countries had its own currency. It became a euro. So all this, I wouldn't say revolutions, right? But all these movements, all this money flow is normal, and it's very normal to assume that starting from now, I don't know how long it will take, but the US dollar might be losing its position as the leading currency. And right now, more and more countries are doing everything they can to keep that happening. So we have the ADP, which is priority non-farm payrolls on Friday. Today is the warming up report being published, and today rates in Canada. And rates in Canada, unemployment rate in Canada. And also, this could be very, very interesting news to follow for all those of you who are looking to trade the Canadian pairs, because based on that, it's one of the factors that based on that, the central bank will make the decisions for the next rates coming in Canada. So let's go to our trading opportunities. A quick follow-up on the two I discussed on Monday. That was the pound Australian and the Australian Canadian. So I would want to start with the pound Australian. I was looking to see this pullback here taking place towards this area, the previous lows. However, you can see that we were missing a little bit here to complete the movement. And with the news coming out and the disappointment from the traders with all the action that the central bank did or did not in that case, the pound Aussie makes a turnaround and creates here a V-shaped reversal. And this is why it's very, very, very important every single time you are looking to trade the pullbacks. Okay? Define your zone, which is broken support, it becomes a resistance, supply and demand areas, falling trend lines. Make sure you have price rejection, okay? Not just visit, but a rejection. And what do I mean by that? Once the price enters the key level you define or enters the zone you define, make sure you start to see some rejection. Candle patterns, sequence of lower highs, lower lows based on the candles, not 15 minutes candles because there is mainly noise, right? But in that case, it's a 4-hour chart analysis. So I want to see the 4-hour chart slowing down, sellers take control. Remember, when sellers take control, they manage to make what? Lower highs, lower lows. When buyers take control, they make higher highs, higher lows. If it's on candles or if it's on the swing highs and lows. So the pound Aussie basically invalidates the bearish view at the moment, bringing back the possible bullish momentum towards, and it's very important to bring it here. Let's erase these lines. It's very important to pay attention where are the next key levels here, and it's all the way here. Okay, why do I treat these levels as important ones? You can see in the previous uptrend, right? That's the most recent high that behaves as a supply, and in the move down, that's the zone where the sellers took control. So after failing the reversal signs on a first attempt before the news, the pound Aussie is very likely to enter this area before any of the next rejection could go and start build up. So this is the pound Aussie, and the Aussie CAD we were looking at also at the first session on Monday. The idea here is also, let me just mark the level so it will be easy to follow, that we have several important zones to watch. This is the big demand area. Again, let me explain why. In the previous bearish trend, low, low, and low create here a zone of demand. That's where the buyers managed to take the control. And the one before was here, which clearly seems not holding. Now, I wanted to explain here a very interesting fact. Take a look what happened here a couple of days ago when the engulfing was formed. Here is the engulfing I am talking about, this big candle. Okay? Engulfing by itself is one of the strongest patterns, without any doubt. But engulfing by itself might be not enough in many times, especially when you are looking on a verified reversal. So one of the strongest signs in such cases is verification candle. Okay? When another candle goes and closes and holds above the engulfing, that will complete two candles that make higher highs, higher lows, and then in most of cases, and I say most of cases because in trading there is no such thing 100%. Okay? It's technical analysis. It's based on analysis and fact, but it's still probabilities. So don't look for warranties, guarantees, or anything like that, right? So if the engulfing managed to complete this sort of confirmation, it becomes much stronger sign. And we can clearly see it did not. It just one engulfing, right? Now, why do I say that? It's very important to pay attention to what happened since. On the 4-hour chart, right, the market was trying to start a negative climb here, but again, it's a single high, right? Never managed to create any continuous sequence. And instead of that, we can see that as soon as this low is broken, the buyers fail to take control. So there is no way to get involved in the AUDCAD yet, which brings back this level, okay? This very level we started with. The first level did not manage to create a reversal. That's usually a sign that the sellers can try and take the control to the next important levels, which in our case tends to be the visit of the previous lows. And also, if we plot Fibonacci extension here, let me just show you quickly. Where's the Fibonacci extension here? Okay, anyway, I'll just drop it with my here. Okay, I'll just draw it with the lines. If we plot the Fibonacci extension on these two waves, we will get the 61.8 extension right here. Okay, so with that being said, and the fact that the buyers failed to take the control, the simple view here is with the AUSD Canadian that it's very likely to go and continue with the ongoing trend and to reach the next important level. What happens around the next level, of course, time will tell, but one of the possible scenarios I will be following is the visit of this area, lower lows or another low to be created and completed, and while the market will make the lower lows, I would want to see higher lows on the MACD to complete a bullish divergence, step back from the sales, and start looking for the possible reversal signs. So this is a quick follow-up on the first two instruments from Monday. And for today, I have some also very interesting ones on my list. Let's start with German DAX, which I believe is one of the interesting instruments currently developing. Looking at the very long term, let's start with the monthly. I want to show here something. The data load. Okay, so looking at a monthly chart, we can see that the pair is still in an uptrend. Okay, clearly holding and maintaining its uptrend. The most recent divergence is a bullish hidden divergence when the market makes higher lows, indicator makes lower lows on the histogram. This is a very strong zone, and the fact that the demand area holds and bounces is a strong sign by itself. Why do I bring it up? Because after such cases, very likely to assume the market will try to create another high, or at least get close to a retest of the previous highs, which both scenarios did not yet happen. Now, as you probably know from Monday, where I explained how I love to work with the chart, I love the multi-time frame. So when I go to starting from higher time frame, I go to lower time frame, and here again, at the end of the corrective movement, which we got here, we start to build higher highs, higher lows, which makes me think any pullback here should provide us the opportunity to go and to join the continuation, expecting the monthly chart to make the final high. Going down to the daily chart, we can start to see some slowdown taking place here, right? 3 waves, slow down with the divergence, RSI slowing down, right? Which by itself means a pullback is very likely, and that's exactly what we want to see. A pullback taking place, retest the previous important zones, and we have here a zone of buyers, a zone of buyers, come to this area and provide us further continuation. So for the longer run, DAX for me should be one of the interesting opportunities to follow, to buy the dips. As I said at the very beginning of this video, I don't like just a zone, I like a rejection. I want to see the buyers are back, because the fact that the zone is reached means what? Means nothing. Yeah, okay, so the zone was reached, so what? Right? We want to make sure the buyers are really interested to take the control. And the way I love to see the buyers take control is, as I explained before, I want to see rejection. I want to see the higher highs, higher lows. That to understand the buyers are really interested in that level. Okay, so for me, buy the dips on the DAX becomes a very great probability, and I would expect to see, I go back to the monthly, I would expect to see the previous high and ideally a new high being created until we will see higher highs on the chart versus lower highs on the MACD indicator to complete the divergence. It's called bearish divergence or negative divergence, and then step back from the buys. So this is the DAX. It's more for those of you who are looking for a longer term. The next one on the list for today is gold, which gains an amazing momentum, and the way it looks right now is all the way to the ATH or all-time high, which makes very much sense here. Slides. Which makes very much sense here. So I do expect to see the gold going and retesting the dynamic resistance line, connecting the previous swing highs, and potentially even going through that until it will also go and complete the long-term divergence. That's not the case at the moment, as we can clearly see. That's why for me it's still buy the dips. Going down to the lower time frame, here is what we see. After the corrective structure we saw here and the bullish divergence that followed, the gold managed to keep that as an important supportive zone surrounding the 1600, and since then making the sequence of higher highs, higher lows. You can see nothing prevents the gold at the moment from continuation. Therefore, any pullback here should be considered as further buy opportunity. Dropping down to the daily chart, and here is what we see on the daily chart. The most recent leg also makes the higher highs, higher lows. Very interesting thing, we are coming very close to the previous swing high and the area of supply. In many cases, such area is the area that create the first corrective movement, and that's exactly what I would be looking here on the gold from this zone to start to see the pullback. And when the pullback takes place, then again the zone of buyers, the previous lows and the low spikes where the buyers take the control is the first area to look for bullish signs. Now, a very possible sign here, of course, I can't predict how the market would be, but very possible sign for trend continuation is a bullish hidden divergence, a divergence for trend continuation. The way I love to work with that is when the market makes the trending structure, like in that case, making a corrective structure, and then we manage to see the market making higher lows, the price making higher lows, when the indicator would go and make lower lows. If that happens around this zone, it's a very, very strong technical sign for possible bullish continuation. So for me, on the long run, gold is buy the dips. On the short run, as it comes close to the supply area I just showed before, I would be possibly looking here for sells. And here is why. Okay, so here is what we did see on the gold before. Okay, 3 higher highs, higher lows, range. The range is broken, and right now with the supply we saw from the daily chart and the fact we are very close here, as you can see, next to the overbought conditions on the RSI, where it goes close to the 80, and the same about the MACD moving averages, right? While the market is making the higher highs, higher lows, the indicator starts to indicate that, hold on, it slows down. The buyers are being more and more and more cautious now as they are approaching towards the supply area or the previous swing high from the higher time frame. So this zone here would be the zone for the short-term pullback to start and build up before the long run continues higher. Okay, so that's about the gold. And where is my next one? The final one for today, which I want to cover, is the Aussie Kiwi. Basically, fundamental. Australia did not hike the rates. New Zealand did hike the rates. Against the consensus, the price should find the new common ground, a new middle price according to that. With the fundamental view comes the technical, and I expect to see this was the first bearish leg, okay, where we can clearly see a sequence of lower highs, lower lows. We got the corrective structure of 2 waves, and the market flips again, making lower lows. So I believe that this leg is going down to complete itself. We got a range which been broken, and I expect to see further continuation down, at least to the zone of the previous low, and very, very likely to a new low until the market will manage to go and complete a new reversal signs, or in that case, positive or bullish divergence. So with this analysis in mind, on the lower time frame, this is the range again, right, which been broken. On the lower time frame, can start looking for the setups of the waves, lower highs, lower lows. We saw it from the higher time frame. Now we want the lower time frame to continue and gain a momentum. Very important reminder here. I mentioned it before, but I want to mention it again. Sellers, when they are in control, they manage to make lower highs, lower lows. Then a pullback towards the previous highs, where the sellers managed to take the control, right? In that case, for example, this is the most recent high with the broken resistance. If we get another high here, it becomes the high of a retest, right? This could act as the zones you will want to see your opportunities building up. Okay, the same on the same logic like it was here before, right? This becomes a high of interest. This becomes a high of interest. We don't know where the market will reject, but you define the levels first of all, and then you look at the opportunities. And these are the levels that we will want to pay attention to. So right now, with the range being broken and the higher time frame hinting possible continuation, that's how I would anticipate to see the Aussie Kiwi building up, right? Making the highs, then lows, and with that, with any pullback coming in place, I believe sell opportunity is what we should be following. And the other, of course, way is going to the lower time frame and following absolutely the same, where the sellers take control, broken support, it becomes resistances, previous highs, that all are zones of actions. That's how I love to call them. As soon as the price get to these zones, this is our time looking for a rejection. There is no guarantee the market will reject, right? But we do want the price to get into the area and the seller starts building up their interest again. How? By making lower highs, lower lows. It starts with candles, then it develops into swing highs and swing lows. So these are the pairs I am going to follow right now. There are several other ones cooking and could provide very interesting opportunities as well for the next week, and we will be following and seeing them. So if you have any questions, it's a good opportunity now to ask. Or if not, of course, ask any question on the in the comments of the video that will be uploaded later on. You can reach me out personally to ask anything about what I explained or anything you would like in Home Trader Club. And I hope you find it useful and interesting, and I wish you good trading. If there are any questions, guys, make sure you put it down now in this chat. I have it here on the other window. And on the other opportunity, I would like to thank Eightcap for making such wonderful events with different traders in different months. I think it's absolutely fantastic, where every trader can bring his value, his trading style, his approach, and help others in their trading journey. I think it's fantastic. So Eightcap, thanks a lot for making it happen for your community. So let's see. Yeah, okay. Seems we do not have any questions at the moment. As I said before, guys, feel free to reach me out in the comments or directly on my website if you would like. And I'll see you again on Monday. Okay, I wish you good trading. All the very, very best. Stay safe, be well. Thanks for your time watching this video, and bye for now.